Hey guys, this is Will from PowerTraders.com. Today I'll be doing a weekly analysis on the US indices. So as you guys can see here, there's the S&P 500. Let's just jump ahead and take a look. So as you guys know, we had a breakout back here in November, and since then we've been trading in this really nice trend channel. And of course, if you guys have been watching my videos for a few weeks, about the US indices, specifically S&P 500, you know that the focus for the past few weeks has been, or more honestly, the past few months has been this yellow resistance line here. Since we broke below this yellow resistance line in May 11th, basically mid-May, we have failed to trade above this yellow resistance line ever since. You see attempts here, 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 and here, and we have failed since. So we've been trading in the bottom end of this channel. Another thing I'd like to point out, the 200 moving average on the 8-hour has also been really on point. You guys see touch here, 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 and here. So the 200 moving average on the 8-hour chart has been really on point, and we see that recently it's been diverging closer rather than staying in this line here. It's been, as you can see here, diverging towards this green line here. So that's interesting, and that's definitely a strong support to keep an eye on. But let's take a closer look at what's happening right now. As you guys can see, if you guys watched my video last week, we had a consolidation in kind of this range here, and I was like, this could be a potential breakout, and we actually got the breakout. You guys can see here, breakout, came back down and then retest before finally resuming off, and we're up ever since. So that's been great, and honestly, you can actually, this does look like um, parallel structure. Let me just take a quick look here real quick, guys. So there you go. That looks pretty on point. So let's see what happens. So right now we are testing the bottom end of this channel here, short-term channel. So what do I see in this coming week? We could come back down to test this again. We could break it. I think it's entirely possible that we'll come all the way down, which to test this, which was once resistance, now support, right? To test this level here before zooming off. It's also possible that we just come down, test this level, and resume off from 4,440 as well. That's also entirely possible. And of course, what I'm excited to see is price to come up to test this yellow resistance line here, which has held us back since May, guys. So that's going to be pretty exciting coming few weeks, especially if we become more bullish. Let's see if we could actually tackle and break above this yellow resistance line. All right, let's take a look at the VIX. As you guys can see here, let's look at the daily chart a bit better. So you can see here, we are actually we had a spike today, guys. You see here, 10% spike on the VIX. Interesting, considering the S&P is, at least the futures as of today, we're only down 1.27%, but the WIX is up 10%. So what does that mean? It means that price has been consolidating for a while now, and I did point this out in my last video. If you look at the average true range, which is one of the indicators of volatility. There's many indicators of volatility, but what this tells you, that range has been really low here, guys. If you can see, if I zoom out, it hasn't been this low, and you see this structure here, it looks like, well, kind of looks like a VIX. But anyway, but if you look at the range, it hasn't been this low since, well, July here. But if in the coming days, if we continue to trade ever narrow, we're basically going to see the lowest range since 2020. And what that means is volatility is really low. And as you guys know, the way market operates, we go through periods of quietness, trading sideways or in a tight range or narrowing range until volatility picks up again. And although we are seeing volatility pick up 10% today over a small move, that move is skewed, right? Because yes, volatility is coming back, but because price has remained so narrowed and so in a tight range, so when things does move, even by 0.5% or 1%, the VIX just ticks because it's skewed. So anyway, guys, the VIX is low. Let's see what happens. I do think this is just a one-off move, but let's see. Maybe we'll have more sell-off, especially um, especially if we come back down here to 4,415. It's really possible that the wick will spike. But nonetheless, nothing, exciting. The VIX not really indicating anything exciting or anything interesting. Uh, so let's see. Now let's take a look at the NASDAQ. The NASDAQ also been trading in this nice channel since October, and nothing too exciting on the NASDAQ. Also, we continue to fail to break above this resistance level, and in fact, you can even draw another one. We are even, we're struggling to set new highs at around 15,150. As you guys can see here, we're struggling to break above this. So let's see what happens, guys. We may come back down, test this level. Maybe we'll have a breakout in the coming days to test this resistance level, this one right here, and maybe we'll see a move higher in the coming weeks and coming months. But for now, guys, we are still struggling to break above this resistance level at 15,150. Let's quickly look at the volatility index uh, of the NASDAQ. You guys can see here, I did point out that we might have a breakout on the volatility index on the NASDAQ, and that's exactly playing out right now, guys. Although, yes, price is skewed. So let me phrase that. Volatility is generally skewed. When volatility falls, it's generally skewed um, to the bullish side, and when volatility spikes, it's generally skewed to the bearish side. But in this case, that's not really playing out. The reason why we had a breakout here at 1550 on the NASDAQ volatility is because, as you can see here, we've been trading in a really tight range. If you see here since July, you can see you can even draw kind of like a triangle structure here that we haven't really moved much, guys. The range between in the Nasdaq since July has been like 2.5%, and that range is getting ever and ever tighter. If you look at the range we have right now, um, it's only 1.3%. That's the range we're trading in. So that's really, really tight. Really, narrowing down a lot, and that explains why we had this breakout here, because volatility is dropping a lot. Let's take a look at the Dow Jones. If you watched my video last week, I explained that we could be forming a bullish flag here and we'll see a breakout. And guess what? That exactly played out as I predicted. We had a bullish flag, finally had a breakout on August 10th, and we just zoomed up, which is great. We're up since the breakout. We're up around only 1.3% though, not too crazy, but on the charts, it's pretty visible. We're setting new highs. You can see here it clearly broke above this resistance level here at 35,000. And right now, of course, we're seeing a pullback. But for those of you guys who took this trade, congrats. Especially if you bought short-term options expiring in a few weeks on a potential breakout here, then congrats. I didn't, so anyways, but even though I thought that was a pretty strong possibility, but that's part of trading, right, guys? Sometimes you do miss those trades. But anyways, guys, nothing too interesting right now on the Dow Jones since the breakout. Maybe you can kind of draw a resistance line here, but right now we're pulling back. So whether we'll pull back, maybe whether we can zoom back up. Maybe we'll break this level here at 35,260. Entirely possible also. We'll have to see what happens, but right now the Dow Jones just not that interesting. Russell 2000, also another one that doesn't look that interesting here, but I'll show you guys a potential short-term trade that may attract some of you guys. But you can see here we've been trading this narrow range. not really that narrow, right? The range I believe is around, as you can see, 12%. It's been trading this 12% range between 2,370 and 2,080, and it's been trading in this range since February. Nothing really exciting as of now. We're trading pretty much at right in the middle of the range. But if you guys go in a bit closer on the 1 hour, it does look a little bit interesting, guys. As you can see here, it looks maybe 2 hour. Okay, that does look better. Okay, so if you go on the 2 hour, it does look like a potential channel forming here, guys. And you can kind of draw, these are just the two major support levels. So you can see here, pretty interesting. Let's see if that corresponds with any move. Somewhat does correspond with this price action here. So we will leave that out there for now. So right now we're testing the support level of this channel, short-term channel. You know, it's only been around since July 20th, and we're also we're looking at 2 hour chart, but maybe we'll see a resume off from here potentially. On the other hand, if we do break below this, we may, you know, come back down. I don't really see any horizontal support because we're literally just trading right in the middle of the trend, right? So a break here, you know, doesn't mean that we're going to go all the way down here or even lower, right? But it's a possibility. But anyways, guys, if you are looking for a decent short-term trade, and the reason why this trade is, I think, maybe attractive because we're trading at support right now, right? You have a really tight stop loss. Say you're willing to risk 0.5%, and you are maybe a profit. You'll take 2/3 of the profit here, and maybe save a third of those positions for a price to move all the way up here. That doesn't seem like a pretty bad trade to me, of course. But again, this is not financial advice. That is just my opinion and how I trade and you know, my trade setups. Let's move on to the next. We do have, okay, yes, so now the hype stock. So of course, for you guys who are new to my trade, the way I track hype stock is I look at two ETFs, XITK, Spider Fact Sheet Innovative Technology ETF, and the other one, of course, is the classic ARKK. And nothing really too interesting. 200 moving average, not really holding it. ARKK. If you go on the weekly, the 20 weekly moving average, looks like we're holding it. That does look like it's playing out as support for a bit, but again, nothing really interesting. Although the ATR average true range has fallen quite a bit, quite significantly. You can see here it's fallen quite significantly and continues to do so. If you go on the 8 hour chart, 4 hour chart, you can see here it continues to fall. We're making a new low on the ART since March. So volatility has been falling, definitely. If you look at SITK, kind of the same thing also. Volatility is falling. See 4 hour, 8 hour. Actually does seem like volatility is picking up a little bit here on the XITK, but nonetheless, we can see here since March, volatility has fallen significantly. XITK does look a bit more interesting because if you look here, we are currently testing the 200 moving average as of today, and of course in the past we have held that, right? Look at here on July 19th we held the 200 moving average, and it seems like it's been a support in previous periods. So let's see here if we'll be able to hold the 200 moving average in the coming days. But like if you guys watch my video, again, we need to see price come back up to 230 and basically have a breakout. Same thing with ARC. We have to see price come back up to a 130, which is a clear resistance level here before, and of course price has to break above that also for me to consider ARKK to be, you know, more bullish, more attractive. But nonetheless, as long as we're below that, guys, ARKK, XTIK, hype stocks, not that interesting right now. All right, let's look at the economic calendar. This is going to be a pretty crazy week. Not too crazy, I hope, but it is quite action packed. Let's go through the list. Of course, we have our retail sales coming out on Tuesday. And on Tuesday we also have the much anticipated Fed Chair Powell speak on Tuesday. It's going to be really interesting. And of course, the next day we got those FOMC meeting minutes. Super interesting here. Another one, we do have crude oil inventory, building permits, you know, how the housing market, housing starts. So that's going to also going to be interesting. And on Thursday, to top that off, we got initial jobless claims, guys. So Wednesday, you know, it's going to be, you know, it's pretty action packed, right? Wednesday we got Powell. Oh, sorry, Tuesday we got Powell. Wednesday we got the FOMC minutes. And then Thursday we got the initial job claims. And actually on Monday we got retail sales. So it's going to be a pretty action packed, guys. Volatility could definitely pick up this week. So yeah, definitely stay tuned. Definitely keep an eye on the market this week. To top that off, we also have decent amount of earnings coming out. Nvidia, Walmart, Home Depot, a lot of, you know, stocks in S&P 500 have releasing the earnings this week, so that also could add to the fuel if there is any volatility. That could be a catalyst for any volatility that will occur. So definitely keep an eye out. Like I said, this week could be really action packed, guys. Definitely stay sharp, stay tuned. Keep an eye on these news and also definitely these earnings. Definitely. Anyway, guys, if you guys enjoyed this video, please give a thumbs up and of course subscribe for more content.